am so excited to bring another segment of the deep dive over here on Bitcoin Magazine Live. I'm really excited to get this segment started with Root. I know Dylan and Sam are cruising into the spaces soon, and they're already on YouTube. And this version of the deep dive is going to be exploring Root's amazing Hodl model that he released with Bitcoin Magazine this Monday. And earlier last week gave a preview to all the deep dive subscribers. So really excited to get into it and to tease it out. I know before we get started, and I know, again, Sam's still kind of creeping in, and we have another minute here before we're officially going. Dylan, do you want to talk about the deep dive, what you're doing there, kind of give a quick plug for all the listeners?
Yeah, sure. I'm not in the spaces yet, so I requested to speak there. I don't know if you want me to wait, but for the non-space listeners,
the deep dive. It's going through. Here you go.
Cool. Yeah. So we're gonna be breaking down Root's article today about kind of a really interesting model with a liquid supply, but which he graciously offered to post first with the deep dive, which we sent out to subs on Friday. But basically the deep dive is kind of a total market newsletter, research analysis around Bitcoin, and we increasingly incorporate kind of the macroeconomic backdrop with our thesis that Bitcoin is the best money ever. And so we offer kind of not trading advice or entries or anything like that, but more so just broad-based analysis. We try to present an unbiased perspective, obviously with the underlying thesis that Bitcoin is the best money ever, and we're just kind of documenting the monetization process with math and numbers. So excited to dig in here today, but that's basically an overview of what we do.
Dylan, outside of the model, anything that you want to jump in on or touch on regarding the market? I guess maybe we can jump in on that too, but we'll save that for the end. Want to pass the mic over to Root, the star of this spaces, and maybe he can kind of talk a little bit about the impetus for the model before we get into the details.
Hey guys, thank you so much for having me all. You can all hear me good?
Yes, sir.
Yeah, perfect. So thank you so much. Really excited for this conversation on my model. It's a relative simple model in a way, but it's still modeling one of the most important trends in Bitcoin that I think that is maybe underappreciated, which is the growth of a liquid supply. And so usually, we only talk about price models and so forth, but this model is actually about Bitcoin supply, and that gives interesting insights that were previously still kind of untouched or untapped. So I think it will be an interesting conversation. Look forward also to some of your opinions, Dylan. Sam obviously has done a great job with helping me write the article, and it's excited to hop into the charts.
Yeah, do you want to just give a broad overview of kind of just like a quick rundown of what it is, and for our listeners, like a TLDR, and then we can really dig deep into it, or you want to just start off at the top?
No, we can. I can give like a quick summary. So basically, there's the trend within Bitcoin is basically that illiquid supply has been kind of outpacing new supply issuance lately, and so more or less since the third halving, which is a very interesting trend. And so the Hodl model tries to kind of model the behavior of a liquid supply into the future. And that gives very interesting insights because we can look at things. I haven't shared those insights yet, but there are certain things that we can look at. Like, for example, we can better estimate how much the halving will impact. If you look at previous halvings, they were always the catalyst for new cycles. And so if we look at the Hodl model, we can actually kind of project like the impact that the halvings will have in the future. And so we can, better, we can see if, how much impact it's going to have on Bitcoin cycles, because we're kind of breaking loose of this 4-year cycle trend. The 4-year cycle trend was all obviously based on the halvings. And so now we got to a point where, we are kind of breaking loose, and still for the last cycle, the halving was still the major catalyst to set this bull market to be the start of the bull market. But I think into the future, halvings are going to play a less significant role, and so perhaps like other catalysts will also have more, effect on cycle behavior. And so I think we could actually see. So I've done another spaces on this before about kind of the supply dynamics, but you could kind of see that the supply dynamics of the 2017 cycle, that in the last 2 years we kind of repeated that same pattern in terms of long-term holder, short-term holder behavior. And I think that's very interesting, because that could mean that, if we were to see, for example, prices above 100K, one point, before next halving, then one way to view it is that, we have a lengthening cycle, but the other way to view it is that we have just a complete different, like, new cycle. And we can actually see now that, short-term holders are kind of out of the market. So, the hype is truly gone at this point. We're really, making a bottom here, it seems like, based on long-term holder behavior. And so it's very interesting to see, like, from this different perspective, that if illiquid supply is growing, and which we can actually see because we made the 69K all-time highs, we basically made just based on long-term holder behavior, because also already the short-term holders were kind of out of the market. And I think that those are very interesting dynamics, and it could really give a change of cycle behavior into the future. And I think the Hodl model will kind of help with looking at this cycle behavior, and it can give insights into what the cycle might do. And so I think that's very interesting. There's still many unknown factors, and it's also I presented it as a hypothesis. There's no truth here yet, or there's still many uncertainties, and for sure more research is needed. But we can't deny the interesting aspects and the perspective that the Hodl model provides in a way. And so I think that's very interesting to discuss.
So for maybe any listeners that aren't too familiar with on-chain analysis, what is a liquid supply, and why, and how could we possibly say certain Bitcoin is illiquid or liquid or highly liquid? What's the quantification there?
Yeah, so the quantification is basically on a scale from 0 to 1. We can classify, what the supply is, and so we actually look at entities, and this is all Glassnode's data, right? So illiquid supply is also it's based on entities. So entities that spend less than 25% of their supply, they are classified as illiquid. And so the other, so if you spend more than 25%, you will be classified as either liquid or highly liquid. So that is the classification here. And so illiquid supply are basically entities within the space that spend very little of their supply. Obviously, there's some spending, because even a long-term holder like a hodler will still occasionally maybe like spend a little. He will be mainly stacking, and but he will still have some spendings. But so that is incorporated in illiquid supply as well. But still, we can kind of say that illiquid supply very much represents hodl behavior. And as for long-term holder supply, so they overlap also quite a bit. So supply can be either divided into liquid and illiquid supply, but on the other hand, you can also divide it into short-term holder, long-term holder supply, and supply on exchanges, which is another division that Glassnode does. the long-term holder supply very much overlaps with illiquid supply, and also kind of represents this hodl behavior within the space. Did you have a question, CK?
No, I just wanted to jump in and show the YouTube link that is the second pinned tweet in the nest for those who actually want to go see charts as well as our beautiful faces throughout this conversation. We are simul streaming this both on YouTube as well as on Twitter Spaces. So go check out Root's face as well as his charts by clicking in on that YouTube link. But yeah, want to hand it back to Dylan, Sam, and Root.
Yeah, I'm happy to maybe give color on that too, just expand. So the in terms of like the liquid supply quantification too, I think it's important to note that any time through history of a liquid or highly liquid entity, which, you know, investor, individual, they can have a liquid supply or be in a liquid supply entity, and then they can also, through different behavior, be a highly liquid, depending on how much coins they spend as well. So that's like a fluid over time. It's not necessarily like these are set in stone. So you'll see plenty of times, which you can go through some of the charts, where a liquid supply changes maybe in kind of a significant or relatively pretty strong way. And anyone who wants more of that, within the Hodl model article on Bitcoin Magazine, there's just a great excerpt by Glassnode team and Raphael, the co-founder there, that walk through the whole quantification analysis of liquid supply that's built on. So you can check that in the resources references at the bottom too.
Yeah, I think the coolest part about the liquid supplies or just some of these metrics is that, you know, anecdotally, everybody can kind of feel, whether it's like, you know, friends, yourself, you know, associates, where, you know, people are hodling, but and don't like to spend their coins, and more of that probably free float is you know, in that cohort. And so with something like a liquid supply, we can actually kind of, and it's not perfect, obviously, but we can actually kind of, you know, mathematically show that this is occurring with some of this data analysis.
Exactly, and to add to that, so one person can be multiple entities in a way, you know, speaking for myself. So you can have a long-term stack, you know, that you're just kind of stacking sats, and you can also have another wallet which maybe might totally disconnected from the first one, which you use for maybe some payments and for some lightning and all kinds of other stuff. And so I still think, yeah, it's a very good quantification. Obviously, it's not perfect. But I think it does represent the hodl behavior, and so it's the best we've got, obviously, as well. I think it comes very close with, you know, you cannot do much better in a way, right, than this. So that's very cool. So yeah, I don't know, maybe we can go into the chart, or you guys have still some other questions or things you want to mention before we hop into that. Okay, so also on for the ones that are following us through Spaces, the last tweet I put out, I also included the charts, so you can go to that tweet on my profile, as well. Obviously, on the YouTube channel, we will put up the charts, so you can follow along more easily. Yeah, I cannot see the charts in my on my screen, but I'll get them up as well. Just give me a second. Okay, so
sorry.
the liquids.
They're being shown on YouTube, so yeah, you can pull them up personally or on YouTube.
Yeah. Yeah, so I got the liquid supply chart up, and so basically here you see in orange the circulating supply. And in blue, the illiquid supply. And so at the beginning, you can see that most of the illiquid supply, most of the circulating supply was illiquid supply, and that kind of moved so down a bit. The illiquid supply became less as a percentage of the circulating supply. But you can also see the growth rate here per halving. So you know, in the first halving, we had about 7,500 coins per day that were added to the new supply. And we had about 6,000 or close to 6,000 per day that were added to illiquid supply. So illiquid supply, the growth of illiquid supply, the pace was slower than circulating supply. And this actually discontinued. So we can see that the growth rate of a liquid supply versus circulating supply in the second halving was also less. And so the gap between circulating supply and a liquid supply actually grew. And so in also between the second and third halving, we had between the second and third halving, we had about 2,000 coins a day on average. And for the growth of a liquid supply, that was only about 1,000 coins a day. So it grew almost twice as slow. And so, but then we got to some like the lowest point of a liquid supply, which you can see in the chart. It's highlighted with this a black line with arrows. And so we got to a liquid supply. The lowest percentage was 71.5%, more or less, of the circulating supply. And since that, we've kind of been growing. And so if we look then at the current halving, we can actually see that the circulating supply only grows with 900 coins a day, and the liquid supply is actually growing now with almost double that amount. So that is a very interesting trend. And obviously this has to do with the halvings, right? So the halvings, so on one hand, the halvings cause circulating supply to grow less fast. The block reward halves every halving. And so, and the liquid supply seems to be picking up in pace. So now we're growing faster than we were in the previous halving. And I think that's a very interesting trend. And, because obviously when there's less supply I call it available supply. So the supply that is available for trade, if we have less available supply for trade, then obviously that affects price, or it's very likely to affect price, if there is demand, obviously, because if there's no demand, it won't affect price. But considering like we have demand, it will surely affect price, and we will get later into some charts that show this as well. So that is basically the chart of a liquid supply. Currently, we're at more or less 19 million coins in terms of circulating supply. And I think around 14.5 coins are classified as illiquid. So I don't know if you still have some questions, Dylan and Sam, on this, or some comments.
I guess I have a question. So, part of this is like, here's now this inflection point, and now the pace of growth of a liquid supply is outpacing the circulating supply. Like, why is that so meaningful?
Why is it so meaningful? Because obviously the gap between circulating supply and a liquid supply will, become smaller, and so it will put pressure, on it basically represents Bitcoin scarcity, right? So if we let's say that now we have about 5 million coins that are available for trade. If we can go to, for example, 2 million coins that are only available for trade, it will obviously put a lot of pressure on price. And so I think that's the most important dynamic here that we see. And it looks like we crossed a certain inflection point around that third halving, that we started outpacing supply growth in terms of illiquid supply. And so I think that's it's a very important macro trend which will put pressure on price, because we are actually really seeing here in the data what digital scarcity means. And so if this gap further narrows, which seemed to be the case, although it seems also that it's not narrowing as fast as as it grew larger, so we kind of, in the last 10 years, let's say, we grew from more or less 100% being illiquid to now 70% illiquid, let's say. But to go back from the 70% back to 100, it will take many years. But it likely will not go as fast as we got here. But the important part is that we are going back up and putting pressure on price through scarcity. And so yeah, I think that's very cool. I don't know if you still have any questions.
I'm happy to add just a little bit color on this too. So in terms of like yearly totals over the last halving, what you're seeing, you have the daily total here for liquid supply, but if you take the end of year balances for liquid supply over the last 3 years, you're looking at 588,000 Bitcoin added to liquid supply in 2019, 837,000 added in 2020, and 366,000 in 2021. So when we're going through and writing in this in the model, and we'll get into the invalidations and what some of the model shows, but to really change this behavioral shift, this has been something climbing for the last 3 years. And so you'd have to see a massive shift in investor behavior that's fundamentally different, like a mega shock to reverse this. And also maybe compelling too, this is a little after the third halving, but since March 2020, a liquid supply has grown something of 9 to 10%, while circulating supply has grown about 4.5%. So a little bit, like you can see here, double the pace since a little bit more than 2020 as well, kind of which lines up with a big, kind of macroeconomic shift and kind of the COVID 2020 pandemic crash also.
Cool. Yeah, exactly. And then maybe we can hop into the second chart, which is illiquid supply as a percentage of circulating supply. Yeah. So if you look at that, so that basically shows what we already saw in the previous chart, but in this case, you see illiquid supply as a percentage of circulating supply that we started around like 100%. So all of the supply was kind of classified as a liquid. Then it went down, and we went down to like kind of near the third halving where we started picking up, and this is actually where I spotted the trend first, because it's less visible in the other chart, but here you can actually clearly see the trend that we made a low there in July 2019, and we started moving back up, which is very bullish. So yeah, I just wanted to show this out there, this chart, that you can look at it as well as a percentage of circulating supply, because that helps with the next chart especially. So I think we can move probably to the next chart where this chart is also kind of shown. Okay, so if we look then at the Hodl model, we can actually see the same charts that we discussed before, but now with the Hodl model incorporated. So the Hodl model is basically it's a simple model. It's a log growth curve that tries to estimate illiquid supply behavior into the future, and it got quite a high R-square, so it's quite representative for its growth. And if we then reflect that Hodl model onto the percentage chart, you can actually see that blue line again, that we made a low with the Hodl model at the third halving, and then we started moving back up. Now the Hodl model tries to aim to be a bit of a floor model. I try to keep it conservative because we could model this curve more closely, but I kind of wanted to make conservative estimates. So for example, if we're going to make estimates of how much the next halving would impact, how much impact the next halving will have compared to previous halvings, it's better to have a bit of a conservative estimate than to have maybe an estimate that is not met. So therefore I kept the model rather conservative. You can also see that we're quite a bit above the model now. So in terms of illiquid supply, we're currently around 76%, while the model value is only still around 72 or so. So it's quite a bit above the model. But we can also see, if we look at the second halving, that we also had a trend up at the beginning of that halving, and then we went back down actually and made a low around that third halving. And so there is some room even for the Hodl model, for illiquid supply to come back down, potentially. Illiquid supply, by the way, is more likely to go down if price rises, right? Why is that? Because obviously, if we have exponential price increases, long-term holders and hodlers are going to take some profit, and so part of that supply will now be classified as liquid. And so if we were to see prices above 100K, I'm sure some hodlers are will take some profit, and the liquid supply will go down. But as I said, there is room for that in the model. It's kind of incorporated. But the most important part of the model is that we make this low with the model at the third halving, and so we can kind of see and look at this third halving as the inflection point where basically illiquid supply starts to outpace the current supply. So I don't know if you have still any comments, Sam or Dylan, maybe some questions.
Before they get into it, I just want to make another shout out for YouTube. we are looking at these charts on YouTube. But if you insist on staying to the space, in the nest, the very first chart or tweet that is pinned is a thread that Root posted, and that goes through every single chart, and we are on the third chart. So stay, keep up with the charts either by going over to YouTube. That's the second tweet in the nest, or the third tweet in the nest has the link to that. Or stay up to date with Root's chart that he posted.
Yeah, I would just add some thoughts here too onto this being like almost like a floor in terms of liquid supply percentage, like over time, having this conservative floor where a liquid supply can certainly go above and below, and we see it above here now. And in these sell-off events, one question, I had is like, okay, what's the impact of these sell-off events in terms of a liquid supply? How much does it change? And if we look at like the two previous strong sell-offs, so March 2020, kind of at the high there before COVID crash, and then also July 2021, kind of big local high that we had there. You see a liquid supply in both those, and the first one go down from 72.5% to 71.8%. So barely a point change in terms of a liquid supply percentage there. And in the latest one in July, you see it go from 76% down to 75% or 74.5 really. So when you have these big sell-off events, you expect some of this liquid supply percentage to change. You expect the liquid supply to transfer to liquid and highly liquid hands as entities and investors change behavior. But really, it's a really small shock relative to the larger trend or the larger floor that's being created over time.
Exactly. And so, if we, I also want to mention that the model could be invalidated. Obviously, if we make a lower low than we had around the inflection point, then obviously we need to rethink the model, or but we have some data to kind of back up why we think this is not the case, and we'll get into those charts as well. Dylan, I don't know if you still have any comments or questions about this, or let me know.
No, man, keep it up, and I think I can add some color and some questions at the end of it.
Okay, cool. So then we can maybe move to the next chart. So to kind of back up a bit why why I think the third halving might really be the inflection point. Well, we could definitely see this already in the model, so if we model illiquid supply with this log growth curve, we get the low at the third halving. So that's one view to say, like, okay, we have this inflection point at the third halving. But we're going to look at some other data why I might think that the model actually might hold, and why it would not be invalidated, for example, with next halving. Now, already Sam mentioned that indeed liquid supply drops with significant rises don't have to be that influential. So we maybe we get only like a percentage drop or so in there. That's already one way to look at it, why we think it might hold. But we can look at some other data as well, why I think that inflection point is the third halving. So for that, we look at the next chart, which is the divergence between like long-term holders illiquid supply and the block reward. So let me know when that chart is up. Okay, cool. So here in orange, we can see the block reward, which obviously, with the halving, it goes down. We're looking at a 30-day moving average here, and you can see why the block reward is kind of stable, right? It started with 50 and then 25 Bitcoin and so forth, like it halved. Why do we have this volatility in the beginning? That's obviously because here we look at daily data. So the hash rate in the beginning of Bitcoin was quite volatile as well. So some days we found many blocks, and other days we made a bit less blocks, and so therefore you can see a bit of volatility in that line. That's why I took as well a moving average on that line to kind of filter out the noise a little bit, and so we can see the trend of that orange line. Obviously, we can project it into the future because we know based on Bitcoin's protocol what the halving is going to do for the next halvings. And then we look in black at the long-term holder supply and in blue at the illiquid supply. Now, I put long-term hodl supply in here as well. Mainly, I was focused on illiquid supply in this case. So let's first consider that blue line. So with that blue line, we're always kind of below, in general, below that orange line. If we look at the trend, but around the inflection point, so we made that low there in that orange box, and then we crossed the orange line, and we have now been above it for quite some time. And so that's one of those views to look at it. And obviously, it seems logical that if illiquid supply is outpacing new supply issuance, and you can see that clearly in this chart, that new supply, because it's halving, and even if illiquid supply growth would just be a constant, at some point illiquid supply will outpace new supply because the new supply keeps on halving, right? So at some point it's logical that there is going to be an inflection point, and it seems we kind of are at that inflection point now in the third halving if we look at this chart. I also put long-term hodl supply in here as well. Now, long-term hodl supply is a lot more cyclical. I had to also put a higher moving average on that than illiquid supply to filter out kind of the macro trend here. But we can still see that with long-term hodl supply, we have a similar behavior. We're above it. We jumped above it a few times as well in the first halving, the second halving for a little bit, but now we kind of jumped above it bigger than we have ever done in the past. And so again, that kind of confirms that the third halving might be the inflection point. Now, if it would not be, we will certainly find out before the next halving. We would have to fall back below. That would obviously be kind of a negative. But if we kind of stay above it in general, above the orange line, that would be very bullish, and that would mean that the hodl model will very likely stay intact. And if we were to fall below, it seems to just be more obvious that in the next halvings that come after here, that we will stay above it. Especially if Bitcoin keeps growing as it has been in the past with more or less the same pace, then we should expect that we stay above that orange line. So, are there any comments that I forgot? Maybe Sam or Dylan, let me know.
No, I think that's well said. I don't know if you want to go to the next chart or not, but it also might be worth just touching on, not from the supplies perspective for liquid supply and long-term hodl supply, but maybe some of the demand assumptions in here or that you have and how that plays into a liquid supply. Because I see a liquid supply a lot of times too in terms of this model is you can have a really bullish liquid supply. And we've talked about liquid supply shock ratios in the past. And I think maybe it's a little bit more of a misunderstood kind of short-term trend. It's definitely more of a macro cycle, which is why I like this model projecting out what it looks like relative to new supply issuance. So it might be worth just highlighting some of the demand assumptions in the model as well too.
Yeah, so demand obviously is not a constant, and then so that's why we have this cyclical behavior, especially in long-term hodl supply. Here I kind of tried to filter that out with putting like a large moving average on the long-term hodl supply. But if you look at the long-term hodl supply in general, it's very cyclical, so short-term holders come in the market, and there's a lot of hype, and so you get this very cyclical behavior. I don't know if you still have to add anything in terms of demand.
No, I think it's pretty fair. What I would just say in terms of the model that this assumes constant flow of demand can be volatile. I think just to reiterate on a liquid supply, since it's talked about a lot, I have to think of that as more of a long-term macro trend and piece. But for a while, like we mentioned before, liquid supply can be as high as it is today, much higher, and then we can kind of have to see a lack of demand over the last year relative to what we've seen before, which doesn't necessarily translate to huge price shocks in the short term, but can more long term, and we can get into the hodl price model as well.
Yeah, exactly. So with demand is indeed not a constant, and I think with the last chart that we'll do, we can better explain that probably. So let's hop into the next chart, which is actually something that was yet incorporated with the Hodl model. It's a so that's a chart I've been working on some of this stuff. It's not yet fixed. I mean, I'm still looking at how I can best look at these things, but here basically what I did is I'm trying to look at the change in price. So I actually look at the derivative of price, and I put a moving average on that. And I do the same for available supply. So with available supply, I actually mean liquid and highly liquid supply, which we've talked about before. So we also look at the change in liquid and highly liquid supply, and we put the same moving average on that as well. And we can kind of see that these signals kind of are inversely correlated, which is very bullish, meaning that supply, if supply comes down, that price seems to move up, and vice versa, right? So that is it shows again how much of an effect kind of available supply has on price. Now, obviously, it's also affected by demand. That's why we don't get a perfect signal here. So if we have a lot of demand coming in, like in hype as we had in 2017 or now in 21. Obviously, it makes this signal a bit less perfect. But if demand were constant, we should assume that we would see here a perfect signal. But you can still see, quite clear that this is kind of inversely correlated, which I think is very bullish. So I don't know if you still have any questions or comments on that, Sam.
No, I would just say, do you want to add any color or comments? We don't have to get too into the weeds, but kind of the curve here, influence from, I know you used Wicked Smart's kind of stock to FOMO kind of curve, S-curve modeled in here as well. Do you want to talk about any of those differences or kind of how is created there?
Yeah, so that would be the last chart, the price model. So we were now looking at the change between available supply and the change in price.
Oh, totally. Yeah. Sorry, I had a different chart up on my screen. So yeah, totally, we can get to that.
Yeah. So if we look at the last chart, so that is the Hodl price model. Yeah. So that is basically so what I tried to do here, and this is kind of is kind of concluding all that we talked about before, is that if available supply is shrinking, so if illiquid supply is growing, in terms of the percentage of circulating supply, then we could kind of assume that price would make an inverse S-curve. Now, why is that? Because obviously, at the beginning of this chart, you can see that we had very steep price increases, because also the supply was, the available supply for trade was very little, right? So you can expect with little supply, Bitcoin basically was very scarce in terms of available supply for trade. So price went up, really significantly. Then that slowed down, so that kind of diminished this, and that is because, the hypothesis here is that because available supply is kind of growing in terms, so more supply is available, so the increases of Bitcoin become, are diminishing. And so we get to that inflection point, the third halving, which is kind of where we made a low a low in terms of illiquid supply. So that means a high in terms of available supply. So actually, basically, the most supply available for trade, in Bitcoin's history, we make around that third halving. So therefore, it's quite logical that price will have less significant increases, and so if we then project that into the future, if available supply again is shrinking, then we could expect that we kind of make this this shape, the same shape as we have in the beginning. We have the inverse shape, after the inflection point. So we make an inverse S-curve, and so there you can also see the difference. So between this price model is that the blue line, if you think of a log growth curve, which is actually has been quite popular because we've thought of this always as Bitcoin's price just because of the increase in market cap and that returns were diminishing in size. But so if we would project a log growth curve into the future, it would stay, the slope of that blue line would continuously be decreasing, right? So, but here the difference is that from the inflection point on in the Hodl price model, the slope of the line is actually picking up pace again. Now it's very, the speed at which that slope is picking up pace is very slow because this model is kind of based on the inflection point and on the end point, which the end point is when illiquid supply, when the projections of the Hodl model kind of reach, approach 100%. And so we draw this inverse S curve well into the future. So you cannot see this steep curve up here, but that would be somewhere in 2080, let's say. So that's very far in the future. So it looks very linear behavior here in the terms for the next two halvings. And I think that's a very interesting perspective, because a very common perspective in Bitcoin is that we have lengthening cycles. And, so you could think that the halving was every time a catalyst for each new cycle, and that we have this lengthening cycle behavior because we have, lengthening cycles and diminishing returns. But if we look at it from this perspective that available supply is shrinking, then I'm not so sure if we should expect diminishing returns, because if available supply is tightening, and we saw in the previous chart as well that they seem to be inversely correlated. So that could mean that we get higher price increases into the future again. So it's that basically we're now around this inflection point still, where we have lowest price increases, because that's also the slope of that blue line is basically at a low at the inflection point. And so that I think is a very interesting perspective. And to give an analogy here, if you think of, if you would only live a year, and you would think of all days are constantly lengthening, and then you get to the summer and you still think like, oh yeah, days are lengthening, we can observe it in the data, but then we suddenly have the longest day in the summer, right? And then days are suddenly shortening. So I think maybe a potential problem for the lengthening cycle theory is that we were just looking at only the past data, which we cannot really observe yet this change. But if we look at the projections of the Hodl model, then maybe we might have to think that we might get higher price increases again into the future. So I don't know if you still have any comments, Dylan or Sam, on this.
Yeah, I guess what I would say is just I'm really excited to be watching this data into the next kind of break of all-time highs. Whether that's, I think, partially like this unprecedented macroeconomic environment, decreasing trust with sovereigns around the world as Bitcoin's price and USD breaks all-time highs, or we're going to see a liquid supply continue to just relentlessly tick upwards. And what does that mean for the market? I guess we can't know that as of now, but super fascinated to watch that develop.
Yeah. So also to add to that a little, so I think. So illiquid supply, so it is growing, but if we get to the fourth halving, we will kind of have a better idea at the pace of which it's growing, because the Hodl model is quite conservative now, and but if we get to the fourth halving, more or less, we can get probably a better sense of the direction and the pace of which this is growing, because obviously we're still very near the inflection point currently. So, things can still be invalidated, let's say, as well, or, maybe the Hodl model is too conservative and, we should change it a bit to the upside as well. And I think by next halving, we will probably see better, at the growth rate of a liquid supply. And maybe we'll have to adjust the model a bit to the upside, or even, it's very difficult to adjust it to the downside. That would kind of mean that the model would be invalidated, and that maybe the inflection point is not yet at the third halving, but maybe at the fourth or the fifth halving. And we will have to see from there. But as we discussed above with some of the data that I think it's very unlikely that we'll make another low on a liquid supply, especially because we look at these trends. The Hodl army seems to be continuously growing, and so I don't see a liquid supply coming down anytime soon.
jump in and point out, kind of the significance of what you're saying about kind of like the halvings having a bigger impact moving forward than they have the past two per se. I know there's been, like you said, and really articulated, like this idea of like, oh, the days are getting longer. Oh, the halving cycles are getting longer. The volatility is lessening. But that really conflicts with this idea of finite supply meeting, meeting this kind of exponential increase in demand, as well as what the adoption S curve looks like. So this concept of kind of like a supply inflection curve or inflection point, and then kind of the reintroduction of extreme volatility in Bitcoin price, it seems to make sense from the perspective of adoption.
Yeah, so there is two forces here. So basically, on one hand, we have just the growth in market cap, and so that kind of is a force that maybe causes like diminishing returns, which we have seen in the previous halvings as well. But on the other hand, we have also the supply now, which is tightening again. So that's a force which put upwards price pressure. And you can see in this inverse S curve that also, the reason that the S curve on the right side of the inflection point is a lot less steep increases, is because it's basically a stretched out version of the first part of the S curve. Well into the future, so we have this linear behavior in the second half, and that so we can. I still think we cannot expect the same volatility as we've had in the first and the second halving, let's say, but we can expect kind of maybe 2017 kind of volatility towards the fourth and the fifth halving. Now, some other things. So based on the Hodl model, we can look at the impact of the halvings. And they are diminishing. So they are still diminishing. So the fourth halving has less impact than the third halving, and the fifth halving has also less impact than the fourth halving. That will still be diminishing. And so it is likely, although with the strengthening available supply, that does cause the halving to have more effect than initially anticipated. So it's not like the effect of the halving, which is kind of, the halving has been halving, so also the effect of the halving must have been halving. That's not kind of the case, because we're growing in terms of illiquid supply. So a tightening available supply that causes, again, to have that fourth halving and fifth halving also will have more effect than we maybe might have anticipated, because now we take the supply into the calculation as well. And so I could expect kind of 2017 volatility towards the fourth and fifth halving. I think that would, and if we would see that volatility, then also that kind of confirms that this model, represents kind of a truth, So on the other hand, so in this model, I did not incorporate as much the diminishing. It's a little bit incorporated here because I tried to draw this inverse S curve and to get like kind of a conservative good fit. So it has an R square of 96, and so it has a good fit. But I still tried to be conservative as I could to draw this blue line, basically the model through price. So it does incorporate a little bit of diminishing returns there as well. And but yeah, the great difference here is indeed that from the inflection point, instead of like a curve that has a decreasing slope, it actually has an increasing slope, except that increasing slope is very mild, compared to in terms of it was decreasing a lot faster in the first part until the inflection point. Then now the increase is very mild, and so it gives more like a linear line after the inflection point. And so I think, yeah, it's a very interesting concept, because I think many people in the Bitcoin space especially are focused on that log growth curve and on diminishing returns in general. But yeah, as I gave with the analogy of lengthening days, and then you get to the summer and shortening days, I think it's worth to take into consideration as well available supply. supply, which has obviously not been really taken into account with a log growth model. Now the good thing of a log growth model obviously is that it's more conservative than this model. So if it's broken to the upside, it's people will not be as mad. I'm sure if this model gets broken to the downside, people will get more frustrated. But I still think it's important to introduce this kind of perspective, in terms of like shortening days and lengthening days, to take again the analogy of the summer with lengthening days and then suddenly shortening days. And I think that's a perspective that has not yet been presented in the Bitcoin community. And I think it's a very interesting concept. So I also very much still look forward. I just want to say that this model, it's also a hypothesis. So it's I don't want to say this is the truth and we're going to million by having 5. But it's definitely interesting enough to follow this model as well and see what Bitcoin does, because it's a perspective that, as I said, it was not yet nobody thought of this yet in the Bitcoin community, I think. So I don't know if there are any questions still, Dylan or Sam, you still have something to add to this?
Yeah, I would love to add one. I think it's great to emphasize that outlaying this as a hypothesis and a scenario, the conservative one at that, and just trying to take a first good, sophisticated go at projecting out the impacts of the liquid supply forecasting growth. So I think that's important to remember that people looking at this. I know that we talked about some potentially bullish scenarios and previously before. So if you look at maybe the liquid supply percentage curve on a more recent basis from maybe 2014 to 2016 on, you get a lot more of a U-shaped style curve. And in this scenario right now, you have a liquid supply percentage, reaching something like 80% by 2036. And right now it's right around that 76% range. What would it look like if we get this shock to the upside, that we get this, if we look at, a smaller time frame, we say liquid supply is going to hit 80% and really grow a lot faster than 2036. What does the curve look like? How does that make you think about changing the model? Is it more parabolic? Can you talk through some of your thoughts there?
Yeah, so that's a very good question or comment there. So indeed, the Hodl model is kind of the most conservative way I could get a good fit on the growth of a liquid supply. And there are models that there are fits or that actually make a lot more bullish growth on a liquid supply. And therefore, as I said, so if we get to around having the fourth halving, we can kind of better estimate the curve after the inflection point. So maybe we have to adjust the Hodl model to the upside. Now, what does that for the price model? So that kind of means that if we have to adjust it to the upside, it would mean that the Hodl model would approach 100% sooner. So 100% of the liquid supply will be approached sooner, or 100% of circulating supply basically would be approached sooner, and that would mean that the S curve would be, the S curve for the price model would also be growing a bit faster. So now, obviously, in the beginning of that S curve, it will still relatively remain flat because it starts from that lowest slope. So I think for the fourth and fifth halving, it would not be like a tremendous change to the upside, but it would maybe have still a significant impact to the upside for the fourth and the fifth halving. Now, it would make most impact. It would make after having 6 and 7, which then the S starts to go more parabolic, let's say, and so. But anyway, I think, and that's maybe something I haven't mentioned yet. So I think there will be another inflection point in the future where the growth of a liquid supply will again decrease. And in my opinion, the best way to look at that is maybe when we get to hyper Bitcoinization. So let's say we get a Bitcoin price eventually, in 8 or 10 years or something between 1 million and 10 million. that would mean that Bitcoin will absorb most of the value in the world, let's say, and so no new demand really can it can come in anymore as it has been over the last years. And so I think at that point in time we will probably get to like a second inflection point where the growth of that illiquid supply will again decrease, and because if we have hyper Bitcoinization, Bitcoin will still be used and there will be constant demand, but there's no like millions that can keep on flowing in, because most of the value is already stored in Bitcoin. So it's very likely, in my opinion, that we will get a second inflection point into the future. But in my opinion, yeah, most likely that will be after prices around like $1 million or 10 million per Bitcoin, right? So there's still, and now you could ask the question, yeah, is there enough money like to keep up the pace now? And yeah, I think if Bitcoin is truly going to do what's it going to do, then we have many still balance sheets of companies where money can flow into Bitcoin. We have the bond market where money can flow into Bitcoin. Bitcoin can eat, a part of the commodities. Bitcoin can eat up part of real estate. And so there's a lot of money in the world still that can flow into Bitcoin. So I think it's definitely possible, if Bitcoin keeps on its current trajectory, that we can see those prices in the future. And I to be honest, I think this model can be relatively representative on how fast it's going to go. And I think it's very interesting that for having the fourth halving, it only predicts a price of 100K, but then for the fifth halving, it's kind of a price of $1 million. So it's that those are kind of extreme estimates, maybe perhaps, but yeah, if you think what Bitcoin has done, sometimes we underestimate what it can do in 10 years. So we overestimate sometimes what it can do in 1 or 2 years, but we underestimate usually what it can do in 8 or 10 years. So with that sense, I think it's very reasonable to assume that Bitcoin will reach those prices of 100K within the fourth halving. And to be honest, so $1 million in the fifth halving, it kind of seems high to me as well, but yeah, I'm not going to bet against Bitcoin, and also this is what the model shows through the data, and I try to even keep it conservative, right? So it is the most conservative I kind of could do as well. So the model obviously can be wrong, and as I said, it's an hypothesis, and as I said, there are these two forces. So we have the force which is driving price up, which is available supply shrinking. But on the other hand, we have also this growing market cap, which kind of has this diminishing effect on price. And so the question is like, where do they meet each other, right? Like, so that is very difficult. So and the problem with probably the lock growth curve is that it doesn't account for this upward price pressure. And maybe the problem with this S curve is that it maybe doesn't incorporate enough the diminishing effect of an increasing market cap on price. And although it does incorporate it a little, because we draw that blue, so the model line, we draw it with the best fit through the price behavior of the last 10 years, let's say, and so it does incorporate that a little bit. But maybe it's not representative enough, So that's all I wanted to say. Sam, do you maybe have any questions? Mm-hmm.
No, I was going to say we have about 3 minutes left, so I think that this is a good spot to kind of wrap it up. But to me, this perspective is incredibly interesting. And again, like these models, they're supposed to help you kind of get a better understanding, not necessarily predict the future. So the stock to flow model, I think, was very useful for people to try to understand how that impacts Bitcoin's price and how that is of value to Bitcoin. And I think that this Hodl model and these ideas of the inflection point where a liquid supply and the store of value use case really cement themselves, and then potentially even a future inflection point where medium of exchange and Bitcoin as global money assert themselves. Like, it makes sense with how the evolution and thinking of Bitcoin adoption and hyper Bitcoinization has kind of been going through. So that's just my personal opinion, that these kind of concepts and this framework really make sense. But of course, we're going to have to see it all play out.
Exactly. Yeah. Thank you so much, CK, for the spaces. And I don't know if there's still any last thoughts or so. Dylan, maybe you still have something to add, or yeah. Otherwise, we can wrap it up.
Yeah, I would just say again, thanks for pushing it with us first with the deep dive. We're really excited to share that with our kind of user base. So they got to see that on Friday. And for anyone that hasn't kind of seen that full article, is it pinned in the nest? If not, Root, I believe it's your pinned tweet, that recent model. So nope, it's your other kind of awesome visual. For readers that, or for anyone that wants to check out the article, just make sure to top over to the deep dive. And has it been published on the magazine yet, or is that coming?
Yeah, no, it's available on Bitcoin Mag.
Perfect.
Okay, well, thank you so much, CK, for having this Bitcoin Magazine Spaces and YouTube live stream to discuss the model and to put this perspective out into the Bitcoin community. And yeah, I still hope to get lots of feedback. And we will have to see. Maybe we might have to adjust the model. Maybe it will be good as it is. And so those are all interesting things. And I will keep everyone up to date. If you don't follow me yet on Twitter, make sure you do, and you get the updates on all these models.
Thanks again, Root. And yeah, Root is a must follow. Recently broke 100,000 and 1 million is coming up next. So amazing insights there, and really excited to kind of see the evolution in this thinking. So thanks for introducing it with Bitcoin Mag. And to everyone out there, go check out the deep dive. Go check out Bitcoin 2022. That is happening in 28 days, and you can meet a lot of us in person there. A lot of the Bitcoin community is going to be gathering in Miami, Florida for that. So that's going to be a ton of fun and, history in the making. So again, Root, thanks so much. To everyone out there, subscribe to the deep dive, go to the conference, and use promo code YTMAG to save 10% off. And until then, peace.
Yep.